Okay, so now we're going to begin to analyze the general market as a whole. So the first thing we're going to look at, we are going to look at the stock market, the US stock market, and because it's one of the places that money goes into. And if you look here, this is the chart of the S&P. And if we put our weekly chart, you see that after we had the big plunge of 2008, we had the market come down and put the low, and we had a big move since then, and we did go and test all the high of 1356. This right now is our structure point, and the distance between 1356 and the level of 1066, this has been a level that we can call an acceptance zone or an equilibrium zone or a non-decision zone. This is a neutral zone, if you will. If the S&P goes above 1356, then we can say that the trend is up and we're going to be buyers. If it breaks below the 1066, then we're going to say the market is now turned bearish and we're going to sell it. This area here in between those two is a neutral zone, and since it has been preceded by this big major up move from about 600 to 1356, this thing has doubled in value, if you will. I mean, at the low of from 612, it went all the way up to 1356. This means it has doubled in value. This has increased 100% in the span of 2 years. That is a very powerful move. However we believe what's happening in the world today, that move, that 100% move, is an extremely powerful move, and therefore our bias over here is still to the upside, and we should be able to see more money coming in. The reason I'm being conservative about this is what we call the plunge protection team, and this is something that you can Google it, but it is a force that was very recognizable in the market, and it helps to support the S&P. We need to make sure that it gets above the 1356 before we can actually push high. We will look at the Dow Jones, and it's pretty much the same setup as the S&P. You have a big major move from the low of 2009. The high here is 1287. We have closed the year at 12200. We're basically about 600 points from the high or the structure point that would lead us into a breakout to the upside. So based upon that, our still bias is to the upside for the US stock market, and we're looking to be buyers of it, particularly if it gets above the 1287. That will be where we're going to commit long-term funds. Right above here, we can look for a buy if it takes above the high. So the US market is fairly reasonably strong, and we should look for continuation to the upside. If we're looking at the interest rate, and this is what is interesting, that is the price of the US 30-year Treasury. It is now sitting at or near all-time high. It is trading at 144.26, or basically 145. The high is 146.27, so we're about 2 points from the all-time high. And somebody of you was asking how we look at the money, where the money is getting out and getting into. That is what you see, that the money now is getting out of the euro and getting out of the, and now it is coming, we can see money coming in to the US Treasury. Another confirmation that money is coming into the US Treasury, if you look at gold, this is a weekly chart for gold, and you can see we have a structure point here at 115.40, and we have had, based upon this chart that you see, there is a lot of technical damage that happened to the gold charts, and therefore we'll be looking at gold to be trading to the downside. And upon a trade up below 1540, we can, at that moment, we can say that the trend has changed in gold, and we're looking for a downward trend. At least, again, all trends come in sizes. So this, you might have a trend change in the daily chart, but it's still a correction on the weekly chart. So based upon that chart, if we trade below 1540, then we do have a trend change on the daily chart, and we should be looking for a move to go down towards the 1370. Again, another thing which is rather ominous for gold is that structural point, which would be a structure failure on the daily, is also the same structure point that will be the same on the weekly chart. So that structure point, even though a point is a point, but based upon the chart structure, when they break the 1540, this means that you're getting a trend change on the daily chart, and you're getting a trend change on the weekly chart, and you should get really an explosive move to the downside. And that means that money now is getting out of gold. If you look at silver, it's pretty much the same thing. It's a mirror image of the gold chart. That is your structure point. It tested it, and we are holding. So a trade below the 26.21 again will be another structure failure, which is based upon the daily and on the weekly chart for silver. And actually silver also, we had, that's a pretty strong move. We should look for serious liquidation in silver to the downside. Last but not least, in the metals, we can look at copper, and that is the only one that is decently holding its place. It's still in a bear market. We're still looking for a further decline, but our structural point is the $33.23, and right now we're still, as you see, it's failing to make higher highs, and we're getting into some sort of a triangle in copper, but our bias is still, in this case so far, is still to the downside, and we don't have at least a reason to buy. So money is getting out of gold and silver and of copper, and therefore we ask ourselves where this money is going. And you can see now that, as I said, it is going into the US Treasury. And if you wanted to buy US Treasury, and you want, as a hedge fund manager, you wanted to buy invest in US Treasury, and you are a euro based, how would you buy this? Will you go and give the US government euros, or are you going to give them dollars? You need to go and start to buy dollars, and that move that you see up there, that means there is a bull market in the US Treasury, and that bull market should be matched by an equivalent kind of a setup in the US dollar, because they need to buy US dollars in order to buy this. So the money is getting out of the Eurozone, it's getting out of the euro, it's getting out of precious metals, and now it is going into treasuries, and in order to go into treasuries, you have to buy US dollars. And if we put the chart of the dollar, there you will see that the dollar now is, we have a structure. Let me put a clean chart for you. As you can see, the dollar is pretty much in an upward move. We have a structural point of 80.90. I'll put it for you here so you can see it. And that 80.90 is that is our 80.90 point, and we have been trying to test it and break above it. And if I put the weekly chart, you'd see something very interesting. For the last 3 weeks, we have broken above the 80-90 three times, and every time we fail to go higher. Yet that failure to go higher has not been met by disappointment, has not been met by liquidation. On the contrary, every time it gets above it, it fails, they buy it again. It fails, they buy it again, and it's holding. Therefore, if it's that 3-4 times on a weekly base, this means that this thing still wants to go higher, and therefore the dollar now is one of our buying points, and we should be looking for the dollar to continue high. So that is a strong technical structure for the US dollar. If you look at the Swiss franc, this is pretty much in a bear market. This is a technical failure, and we are now sitting above one major structure, which is the 105.71 based on the index, and we should be looking for this to continue to the downside. So the Swiss franc so far is technically very weak, and it will be one of the currencies that we're looking to sell. The same thing with the Australian dollar. Our structure point is the 101.64. We have been trying to test above it, and we have multiple failures to make higher highs, exactly like I showed you in the euro chart, and therefore this should be leading to a decline. And our selling point is the 95, the 97, 57, and our buying point is easy only if it gets above the 101.64. So we're 50 pips above our buying point, and this is could be seen as a trend changing pattern, and we should be looking for the market to decline, so that we can consider the Aussie as weak. And last but not least is the US, the British pound. And the British pound, the nice thing about not the nice thing, but the nice picture that we see here is that this was our structure point, and that structure point, or what if you want to call it was our support point, has now become our resistance point for the last 2 months or so. Since October we have tried once, twice, 3 times and failed, and every time we sell off. We go up, we fail, we sell off. We go up, we fail, we sell off. We go up, fail, we sell off. Up, we sell off. So therefore it means we should be looking for the pound to decline. But the pound is not as weak as the Aussie, nor is it as weak as the Swiss franc or the euro. We can also look at the Japanese yen. And the Japanese yen, as you can see here, is technically the strongest currency, and fundamentally too it's also the strongest currency, and now it is trading at the 103, 130.01, and our structure point is the 129.85. Anyway, the 130, and there that gives us a very interesting setup, because right now you can buy the Japanese yen and you can place a stop and a reversal right below the 130 structure point, and if we buy it, we can put our stop below the 130, and we can do a stop and reverse in this case, because if it does fail, then you're looking for a push to the downside. So the yen again is technically strong, fundamentally strong, and it gives us a quick entry signal. And therefore, if we're going to put our pairs now, which one we're going to buy and which one we are going to sell, let me give you the So in this case, the dollar, the Japanese yen is the strongest. And when I say the strongest, it's usually if it's something looks so easy that this is a no-brainer buy, well, fine, I will respect that. But at the same thing, the first thing I will be doing is looking for a sell signal. And in this case, I see the sell signal below the 130. So it is the strongest, but I'm yet ready to sell it. Then you got the dollar. I'm looking at selling the euro yen, looking at selling the euro pound, looking at selling the euro Aussie, and I can look at buying the dollar yen, selling the dollar, the euro Aussie, the euro pound, and the euro Aussie. So basically, right now I'm looking to be a buyer of the yen, as long as it's above the 130. If it fails and comes below that, then I'm going to go short the yen, everything else, and I'm going to go long the dollar. You can also see that the Aussie yen might be also a nice situation, because the Aussie is sitting at the brink like this, like I showed you in the beginning, and also the Japanese yen. So those, either of those two can flip on either side and we can move. But basically we're looking first at the dollar, buying the dollar yen, the euro dollar, selling the euro dollar, selling the dollar, the pound dollar, and selling the Aussie dollar. And we're looking at maybe we can do the pound Swiss. If you wanted to buy the pound Swiss, you can short the euro pound, you can go the pound yen, we can look at that either way. But these are basically the pairs we are looking to buy. Buying the dollar pairs and looking at selling the yen pairs if the yen trades below the 130.08. Okay, now let's go and do the pairs individually.